Talk about being safe. I think we all want to be safe in our life, and part of being safe is insurance. And many of us have insurance to protect ourselves and our families. But as we age, we may want to adjust our insurance requirements. And for me personally, I've always struggled with trying to choose the right insurance. Should I get term life or whole life? And what's the difference of those? And maybe I need to be getting disability or critical life insurance. It can get confusing and, quite frankly, overwhelming. So I'd like to bring in Ivan Kahns to help us out. Ivan is a financial security advisor in Montreal who has helped thousands of families and businesses realize their insurance and investment needs since 1990. He helps with life insurance, including estate planning, wealth preservation, and tax-efficient intergenerational wealth transfer. Ivan, welcome to Life Unrehearsed.
Yeah, thank you very much. It's great to be here.
Ivan, thank you. This can be a complicated subject, and it shouldn't be, and that's why I'm so happy you're in here. So, first of all, what can insurance do for you as you get older?
So as you get older, you have to look at it from a different perspective. When you're younger, you're looking at it as a means of protecting your family. But when you get older, you're starting to look at insurance as a measure of wealth transfer. So doing something efficient to contravene the high taxes that you're likely to pay on things like RRSPs, non-residential property, so on and so forth.
Now, there are many different types of insurance. We're going to talk quite a bit about them, but there is one that I didn't even know existed, and it's trending now that our population is aging. I think it's called final expenses insurance, if I'm correct. What is that?
So basically what we try to do is we try to make it as available to everybody as possible. And there are insurance policies where we have something called simplified issue or even guaranteed issue. So the idea is even if you have health issues, medical problems, or were not insurable in the past, we have products out there that you should qualify for. Most people will qualify, and those, again, go under the label of guaranteed issue insurance.
So I want to expand a little bit on that. So let's play it out. I'm in my 80s. My health isn't great. My goodness, I don't even know if I've got cash flow to pay for funeral expenses. It can get a lot. So this is for individuals who may even have health issues that want to be able to get insured, put some money aside that in the case of death, there's going to be a little bit of a lump sum to help the family pay for expenses. Is that how it works?
Yes, precisely. Because what we've noticed is as people get older, they start to become concerned about final expenses, about funeral arrangements, about things that have to be taken care of. So they know if they set aside this particular policy for that purpose, the family's not left dealing with those issues.
And it's much easier, even if you have health insurance. I know I took life insurance. Boy, they had every possible test before they were granted. This one, is there
guaranteed issue. So we avoid all that, and we look at obviously the price will be higher than, let's say, a conventional policy, but we overlook all the health issues.
Amazing. All right, I want to switch over to conversion clauses within existing insurance. What is that?
So most of the policies that you see in the marketplace today allow you, for example, a term policy, allow you to convert to a permanent insurance policy without a medical, and the age limits are usually 65 or 71. It will vary by contract. But the other thing that might be very helpful to your listeners for them to know is that when you leave a group insurance plan, a lot of the carriers will allow you to convert to a permanent policy or a term policy outside of the group insurance contract. So it doesn't mean that if you leave and if you're not insurable that you lose your benefit. It might be worth investigating if the group carrier will allow you to convert to something.
Conversion clauses. All right, listening to Life Unrehearsed, Matt Delvecchio here, and I'm talking with financial security advisor Ivan Kahns. He's the owner of IMC Financial Services, and obviously, as you're hearing, a wealth of information. I want to talk, Ivan, about the usefulness, now we're going to younger generation now, the usefulness of a term insurance for young families.
Has accessible pricing. Usually we recommend for young families to embark on a term plan of some sort. It fits the budget. Generally speaking, younger people will have high debt loads, they'll have mortgages, lots of expenses. So it really is the product that makes the most amount of sense for a young family starting out. And it's very inexpensive, quite frankly.
As you're younger, the rates are certainly lower, and yet you're protecting yourself and your family. All right. Now, Disability and critical illness insurance, it seems to get more and more popular as we age. What are your thoughts on those?
So these are great products. They are, it would take me about an hour to
Hmm.
explain both of them, but effectively what they do is they cover you for any type of unforeseen event. So we're on Life is Unrehearsed, so anything that could happen that is unforeseen, these two products will help replace your income or provide an income up until the age of 65. So they really do fit the bill for most people, and it's important to understand and differentiate the difference between the two. So, very quickly, disability insurance is all encompassing. So, anything from emotional to physical, whereas critical illness is more physical. So, heart attack, cancer, stroke, and it's a lump sum payment. So, once you're diagnosed, you have a survival period of 30 days, and then they pay out a benefit to the insured tax free.
Interesting, because we think of life insurance, that's when we die. But the reality for most of us is that disability, the critical illness insurance will most likely happen before life insurance. And so it's an
Exactly.
interesting tool. All right. We mentioned term and we also mentioned whole life. I get confused sometimes, Ivan. What is the difference between term and whole life?
So, which came first, the chicken or the egg? So, basically, they are both excellent products, and they have specific design and uses depending on, for example, if you're looking at term insurance, for the majority of the market, it's a great product, easy to understand, very accessible, great pricing. Whole life is more of a permanent insurance. It works very, very well if you have a corporate structure. So there's some significant advantages that a whole life policy will offer you. If you have, for instance, an operating company or a holding company, there will be some measures of tax relief that can be provided by whole life insurance, especially on death. Term insurance obviously has a limited time span, so usually it's you're insured for a period of 10, 15, 20, or it could even be to age, it could be even be for 35 years, depending on what your needs are. And obviously, the longer you insure for, the higher the premium will be.
Right. And with whole, at least you could be building a bit of a nest egg, whereas term, that's it, that's all. Once it expires, there's nothing there.
Yes,
Yeah.
but you also, it's very important to understand how money works and to understand future value and present
Mhm.
value when you're calculating what the best product would be for you. So, for example, a young family with a high debt load, you're probably looking at a term life insurance
Right.
policy versus a business owner, you're probably who has some reserves in the corporation or the holding company might be looking at a whole life policy as a better alternative.
Talking with financial security advisor Ivan Kahns about all our insurance options as we age. One last question here for you, Ivan, because I know you are big on wealth transfers. We all have a responsibility for our children, our spouses about a wealth transfer, and I know you are a big advocate of that. So can you share a little bit more about that?
Yes, so this has become really a hot button issue, especially with the Liberal government's proposed change in the capital gains taxes. So if you own a corporation or if you have a non-residential property, let's say a country house or a cottage somewhere, they're going to tax you. And the idea is that what insurance can do inside a corporation, in particular, it can also be done on a personal level. But basically, what happens is it helps to mitigate some of the future taxes that you're going to pay. So, in essence, how you have to look at insurance is it's almost like a vehicle that you're using to prepay taxes, but you get a lot of leverage out of it. So we're seeing more and more people coming on board using strategies like joint and last to die, where we insure a husband and a wife, where the payout is on a last to die basis, but provides a fairly large sum of money to pay off the capital gains or future taxes that might occur.
Very interesting. And there's so much more to that. All the more
Right.
reason to go to your financial security advisor. And Ivan, we're already out of time. I want to thank you for coming into the
Oh, it's
studio
my
here on a
pleasure.
Sunday. Such a valuable topic. I really appreciate your input
Thank
and
you.
the
Very easy. It's if you go to www.imcfinancial.ca, you should be able to find me there, or Ivan at imcfinancial.ca.
All right. Great to have you on the show, Ivan. I'm going to have you back. That's Ivan Kahns, financial security advisor, owner of IMC Financial Services.